Good morning, everyone. Hello and welcome to the weekly commodity audiocast. I am Kaina Chenwala from Kotak Securities Commodities Research Desk, and today we will be discussing ongoing developments in the commodity markets, factors influencing market sentiments, and uncovering the latest trends. So let's delve deeper in this ever-changing world of commodities. So markets were clearly cheerful last week after the Federal Reserve initiated monetary policy easing for the first time in 4 years with a substantial 50 basis point rate cut. The dollar slipped to a 14-month low of 100.2 immediately following the Fed's anticipated move, signaling a shift towards lower borrowing costs. However, Fed Chair Jerome Powell's warning against expectations of ongoing aggressive rate cuts helped the greenback recover to 100.6 levels. At the same time, US equities cheered the decision and posted weekly gains, with Dow surpassing 42,000 for the first time and S&P surging above 5,700 levels as investors were encouraged by the central bank's readiness to take bold actions, boosting optimism about a soft landing for the economy. Talking about commodities, COMEX gold prices surged to a record high of $2,651 an ounce, driven by the Fed's rate cut, dollar weakness, and increased safe haven demand amid escalating geopolitical tensions in the Middle East. Technically, on the daily chart, MCX Gold October futures surged significantly on Thursday and Friday, reaching their highest weekly close, 74,014 in the last 2 months. RSI 14 is over 65, indicating a bullish bias. We expect the price to continue its upward momentum in the coming week, but it may encounter resistance near 75,000 levels. On the other hand, support is at 72,785 rupees. Moving on to silver, silver also rallied to a 2 month high of $31.75 an ounce, boosted by gains in both gold and base metals. LME Base Metals gained momentum last week as markets digested the FOMC decision to support the US economy amid rising labor market concerns. LME copper prices surged past $9,500 per ton for the first time in 2 months, while zinc approached 2950 levels, buoyed by optimism following a healthier jobs report. Weekly jobless claims in the US dropped by 12,000 to 219,000, the lowest level since May, boosting expectations for a soft landing in the US economy. Technically, on the daily chart, MCX Copper September futures has developed a bearish engulfing candlestick pattern. However, it's too early to expect a reversal because the price is trading above the 20-day EMA and the RSI 14 is near 60, indicating a positive bias. Price may acquire new positive momentum if it breaks and holds above the 820.5 barrier level. Initial support is at 797 followed by 792. Moving on to crude, WTI crude oil prices soared above $72 per barrel last week, spurred by the Fed's significant rate cut and rising tensions in the Middle East. Israel's Defense Minister Yoav Gallant announced a new phase in the conflict, with regional Islamist group raising fears of a broader conflict in the Middle East, which could also involve Iran. However, oil prices closed the week at $71.25 per barrel, with 4% gains, as more upside was limited by signs of weakening US demand and concerns about the Chinese consumption outlook. According to the Energy Information Administration (EIA), US gasoline demand has fallen below 9 million barrels, and just jet fuel consumption has declined for the third consecutive week. Crude oil, however, may remain volatile and could see further gains this week after last week's 4% rally, particularly following Israel's airstrikes on southern and eastern Lebanon and Hezbollah's retaliatory actions against northern Israel. Additionally, EIA data revealed that crude stocks at the key storage hub in Cushing, Oklahoma, are significantly below the 5 year seasonal average. This week, key economic indicators such as US GDP, core PCE, would be in focus. Also, speeches by Fed Chair Jerome Powell, Treasury Secretary Janet Yellen, and other FOMC officials may provide insights into the future of monetary policy outlook and influence market moves. Better than expected US data could sustain the expectations for modest 25 bips rate cuts in November and December, as indicated by the FOMC summary of economic projections. While on the other hand, weaker data and hawkish remarks from Powell at the 2024 US Treasury Market Conference on September 26 could further weigh on the dollar. Metals and crude oil may continue to gain this week, especially with reports that Chinese regulators are considering a proposal to allow major cities like Shanghai and Beijing to relax restrictions for non local buyers after previous measures failed to revitalize the struggling housing market. So, overall, the market moves this week will be influenced by US data and remarks by central bank officials. On that note, we conclude this edition of Commodity Audiocast and hope that we've offered you valuable insights. Thank you so much for tuning in today, and we eagerly anticipate your presence with us again next week. Until then, happy trading. Thank you.